Ladies and gentlemen, I appreciate very much your generous invitation to be here tonight. You bear heavy responsibilities these days.
Welcome to Stock Legends Radio Show, seeking answers, opinions, and the inside scoop, putting you in the front seat on Wall Street.
In today's market,
this is breaking news.
Where is it going next?
StockLegends.com.
Ladies and gentlemen, welcome to Stock Legends Radio, episode 18. Please welcome today's host, myself, Quick Draw. Also, we have Joe Knaus, CEO of public ticker symbol QASP, Quasar Incorporated. Joe, welcome to the Stock Legends Radio Show.
Thank you. Thank you for having me.
Oh, it's our absolute pleasure. And we wanted to have you on the show today and talk to you about some exciting things that you have going on with your company, and also give the investors an inside look, Quasar, and what they can look forward to in the coming days and months. Before we get into the company and, the background of the company and all the great stuff you have going on, why don't we take a quick moment, Joe, and learn a little bit about yourself and what your background is and what industries you're from.
Wow, that is an open question. My background has been much bandied about, but real short is I'm a graduate of Stetson University, majored in finance, then went on to be a financial analyst very briefly before I got in the securities industry with NCR Corporation, the old National Cash Register, which merged into ATT, and I think they're spun out again. I then got involved in the securities industry as a stockbroker. I trained other brokers. I went on to be a manager, own my own brokerage firm, and then went out on my own doing investment banking in 1995. Started a cottage industry, financing small companies. It was a time when a lot of financial capital was not available and people were seeking alternatives. And while I'm not an attorney, my father is, and I've always been kind of akin to finding unique solutions. And we did. We stumbled upon the Reg S exemption, which many people are familiar with now, or those who aren't are forgotten about it. But it was quite a prolific way for companies to raise money that was typically employed by the much larger companies. But we found a way, myself and then eventually three of my brothers and a brother-in-law I work with, to incorporate that with smaller companies and put a few twists and turns so that they could get the capital they needed to grow when they necessarily were not in the market for it. It was harder for investors to really justify it. So we found ways to do that provided a solution for the companies as well as a good investment vehicle for the investors that were willing to take that risk. So we found ways to mitigate that. That was in 95. The markets, as everybody knows, have been through numerous twists, turns, tumults. We went from Reg S to Reg D to private placement. We managed our own. When I say we, I work with small family office with three brothers and a brother-in-law. We went on to manage our own funds during the dot-com phase. We had ups, we had downs. Eventually it was down, and they're not all great stories, but they're stories. But we continue to raise money for companies as well as consulting for them. At one point, I was a consultant to True Religion Jeans when they went public in a reverse merger. And other companies, that was a success. There's obviously failures along the way. As you can lead a horse to water, you can't make them drink. And I do have a tremendous amount of experience, I think, in particularly small companies. And I understand the difficulties they go through in trying to balance not only running a company, but with all the twists and turns. As for the companies that I consult, I used to say running a company was a full-time job. Running the public side of your company is a full-time job. And now with all the other regulations, most of the larger companies that are subject to it, even the compliance, not just within their industry, but just as a public company, is a full-time job in and of itself. There are a lot of responsibilities that you have, and in particular, I have advised companies. I've invested in a lot of distressed debt and helped companies recapitalize themselves during these tough times. And it's one of those situations that led me to where I am today as the CEO of Quasar, although I kind of backed into it. It wasn't something I said, hey, I'm great for this. But I do believe that particular experience that I do have in helping others go public, be public, and run the public side of their company is an asset I bring to the company, and hopefully it'll translate into an asset in return on value for the investors as well as the valuation of the company.
Exactly. The investors a lot of times, more than not, don't really think about that side of the market. There is so much involved and so much paperwork involved, not only with just running a public company, but let's talk about, allocating the leadership end of the company. We see so many CEOs come and go within 12 months, and they're out of the business. So having that background knowledge, especially from the funding side, and knowing how to allocate those funds responsibly and be able to really propel the company forward, it has got to be a large advantage for the investors in QASP. So you've got a big funding background, and now you've moved into the aerospace industry. Now, what in particular made you want to kind of go and corner that segment of the business as opposed to other segments? Was there anything in particular that kind of led you down that path?
Well, without being too wordy, I'd back up a second and say that it is an important part and one of the driving factors that from the outside, and this isn't just in Quasar, but when I would always advise companies, is they run this delicate balancing act of, we want to be public so we can raise money and grow our business, but we want to protect our equity. We want to protect our shareholders' equity, which is part and parcel of how much money you can raise. Market awareness, this is part of the job as well as telling people the opportunity, also helps create the liquidity so that you have an efficient market where you see a valuation of your company, hopefully, that you can raise money at the right prices and at the right time. But the number one driving factor in balancing all of these things is whatever you do in terms of finance, it should be viewed with an eye towards being accretive. If I can go out and raise $100,000 and that $100,000 is only going to be a Band-Aid, then that's not really a solution. If it allows me to buy a business that's going to generate $25,000 annually and has $50,000 in asset, I can justify a rate of return, or at least I can explain to my shareholders and other stakeholders in the company what we did, why we did it, and what our return on investment is. And through that view, you really get a unique perspective on how and when to raise money and what's important. And there's so many scare words that people hear in this industry, again, for what we're doing here, market awareness. People equate market awareness sometimes with that boogie word pump and dump, as opposed to saying, hey, there may be a real value here that not a lot of people are aware of. Quasar has specific reasons why it may not have the widest awareness. And in fact, there's some negative awareness about it, which we can get into. But there are also values, I believe, or else I wouldn't have gotten as involved as I did with this particular situation. So to me, the number one job from my finance background is to make sure anything we do is accretive. Now, they're not always accretive. Some of them are necessary. Some of them are legacy. But when we look to grow the company, whether it's through an acquisition or through a capital raise, we need to do it for a purpose that we believe is going to be accretive to the growth of the company. So I'll go back. If you can go back to the other question, I just wanted to add that in there. That's a main theme in my thinking and bringing stuff to the company.
Since we are on this topic, before we jump off to the other one, let's kind of talk about this new Jobs Act that was passed by Obama as well, that makes it easier for the public companies to come in and be able to get access to funds and things of that nature. How do you think that this act is going to be able to leverage or deleverage your position since you are a holding company? Is there going to be a benefit to that potentially to the investors as we start to see that kind of spin around?
I will be quite honest. I know a lot of things and I'll speak volumes on that. I am not fully aware of the impact that this will have on companies, specifically public companies. I know that there's a lot of crowdfunding going on that allows small capital raises up to $1 million. I believe those rules are being written now. I don't know if they're definitive yet. I do see it as an opportunity for some investors who have not been able to participate in maybe some of the small company offerings that are typically called 504s or private placements. I see them as being able to participate in that without small companies being burdened by the overly expensive filings and reportings and regulations that would typically happen, which is why they go to private placements. And a accredited investor can do whatever he wants with somewhat of and this isn't the exact word, but a caveat emptor. He's accredited. He's knowledgeable. For small investments, I believe the limits are up to 5,000 or 10,000, and they change. I think this is unique, and I think for companies that are recapitalizing, not just Quasar, other companies, I think it'll be really unique. If I was a CEO and I had this opportunity, and Quasar, which again we'll get into that specifically, did a 1,000-for-1 reverse. A lot of legacy shareholders are hurt. They're upset. I get the fan mail in a sarcastic way about that. They're not happy. They lost a lot of money before the reverse, and the reverse didn't help them. It would be a great opportunity, this small company offering, if it were to be the panacea that it may be, for a company like Quasar to go to its existing shareholders and say, just for you, here's an opportunity for you to buy in part of the company, if you choose so, up to this amount that allows you to somewhat average down. Again, that's the merits of the company have to stand that. The people have to believe in the company. But I'm saying that could be a panacea for small companies like this to not just do things where their shareholders, they have a disconnect between what the company's doing in terms of raising money and people that get stock at a discount, which is the nature of private placements and these types of offerings. Otherwise, those investors would buy at the market and could turn around and sell in a much shorter period of time. But it would allow those investors who are really interested in the company to participate in financing the company instead of just being in on someone on the outside as a retail investor. I think it's exciting. I do know that, again, I'm not a lawyer, but I have I have experience short of being an attorney in a lot of these situations, that you have to wait till the rules are written, and there are much smarter people than me who write blogs on this. But I'm excited about it if it gives, because it opens the door for creative thinkers to apply this as a solution, not just to fund their company, but maybe to make amends with some existing shareholders, everybody who have not been able to participate on that level before.
Right, exactly. Now let's take a look at QASP. As far as the aerospace segment of the market, now you guys are the only certified Cessna pilot center in Jacksonville, Florida. What kind of benefits do you see from that, and how are you able to leverage that position?
Well, I think there's a number of benefits. I think we're the only ones in North Florida, which means north of Orlando. It has a number of different benefits. It gives us, competitive advantages by incorporating their latest training techniques. Cessna pilot centers have higher student pilot retention rates. The students learn faster. Their training system uses advanced training concepts. And I'm not a pilot, and I'm not the guy who does that. So I'm the financier coming in, and these are just my words. Mm-hmm. From a company standpoint, we are in a preferred vendor relationship with them. So they have a network of their own vendors that allow access to other programs, including insurance, continuing education, flight simulation products. And because of the size of the Cessna Pilot Center, members have access to those advantages wherever. And it leads me into one of the great things about Quasar, which I've come to know. Again, I did not originally. I've entered this as a financier, as a creditor. But North Florida itself, where we are in Jacksonville, Florida, is considered the flight training capital of the world because of the number of days of sunshine. I think Jacksonville and San Diego are two of the top places. Colorado Springs, which is one of our locations, is one of the third. But we're in the right place at the right time, and being the only Cessna flight or Cessna pilot center there gives us a unique advantage, we believe. So that's in short. There's other things that it adds to it. There's advertising programs. There's customer lead programs. And if we wanted to expand on that, we could, and we've discussed it. We could become a Cessna repair station where we'd get all the warranty work from Cessnas, as well as maybe even a dealer at some point. But that's not in the cards right now. Right now, we're focusing on the short game and growing the company incrementally. But it does open a door, and we're the only one there in North Florida for now.
That's phenomenal. Now, you also have multiple other subsidiaries. You've got Ascent Aviation, Inc., Atlantic Aviation, Inc., Corporate Air Repair, LLC, Quasar Aircraft Corporation. So you came in with your background from the funding side, and you said, I like the aviation segment. We'll stick with one particular sector that you know how to maneuver. And you're going in more or less, and correct me if I'm wrong, in purchasing, not necessarily purchasing, but going in and scooping up these smaller aviation companies that you're able to roll into the holdings company and show the revenues for. Is that more or less from an investment perspective how the umbrella is set up from more or less a central holdings company perspective?
Well, there may be a lot of people who are listening who haven't heard of Quasar before, but there are many investors as well that probably have heard of Quasar. So just to give you a little background, Quasar was a company I helped originally merge into another public company in a reverse merger that had plans to do all of these things, to be an integrated aviation industry related company where they were producing their own very light jet, VLJ, it's one of the buzzwords. They were doing flight training. The flight training was going to include this 141, this Part 61, include foreign students, building a dorm, building our own hangar. Also, they were going to be a repair station. They had teamed up with Apex Engineering out of Wichita, Kansas, and a number of other companies that they were going to merge in to be this umbrella, which is how they set it up. I think at one point the company had over a $40 million market cap, which is a far cry from its, $600,000 or $700,000 today. Some of the financing fell through. A lot of people question whether it was even achievable. There were life settlements, and as that fell through, it came out of the woodwork. But a lot of that was set up originally. Atlantic Aviation was the main component where they were doing the flight training, and it is our main subsidiary that has survived the ups and downs of the company. We recently bought Ascent Aviation out of Colorado Springs because we never got our 141 certification or Part 141 certification from the FAA. It's the busiest, for lack of a better word, it's called a FSDO, but a district office in the country. I think they do more certifications and pilot training out of that particular FSDO that governs our location, Jacksonville, than they do anywhere in the world. And that's according to the people who actually do this. As I said, I'm not the aviator here. So we went out and we said, well, if we can't get one through Florida, we're going to go buy one out in Colorado Springs, which we did. Ascent Aviation has a long history. There were a couple other Part 141 schools that were for sale in Florida that we tried to acquire that were literally asking for anywhere from $700,000 to up to $1.5 million, $2 million. The license itself, in and of itself, and I may be using the wrong word, license or certification, is valuable. And again, it's part of what I believe is the value of Quasar, where they've never had this before. They promised to be this, but they were never there. We've acquired it. We're integrating Ascent Colorado we now have a subsidiary, Ascent Florida, so we can be 141 through there. And that's part of the story. The other part of the story for the people who do know is that we went out and got our own air repair company called Corporate Air Repair. It was existing at Hurlong at the time. It was acquired by Quasar. Specifically, when you do flight training, you burn up a lot of hours in the planes, and you need to repair your own planes right away, right there, and at the lowest cost possible. We have a hangar right on Hurlong Airport, which is where our Jacksonville location is for Atlantic and Ascent, and they service our planes as well as other planes, other warranty work, and the annuals as well, which adds to our revenue stream. It diversifies it, and also provides other opportunities that we're going to address in the future in terms of the company being able to participate in some distressed opportunities that are available to us through the insurance companies and just through acquisition. So those are really subsidiaries. The Quasar Aircraft is set up. Like I said, we were originally going to have our own manufacturing. We're not in that business now. We don't anticipate being that business in the near future. but it was also set up to house the assets, and that's from a structural standpoint.
Now, let's talk about this Atlantic Aviation Inc. For a little bit. You guys have plans there to set up the flight training school, and now the technology that you guys have over at Atlantic, like the mentor flight instructor, the professional flight instructor, which is more or less a command center that simulates flight, as well as the Redbird FMX. That's a pretty amazing facility that you guys have there at Atlantic, and the technology is unbelievable. It says that if the average program runs for about 6 months, and each flight student will pay approximately $66,000 for the full program. Now, you were hoping to have it fully operational with 35 students. Now, what kind of, where in the process with the Atlantic Aviation School are you guys now? I can see that, all the pictures and everything for the investors to take a look at are part of our report, and I think they'll be just as impressed as I am. It's a pretty amazing facility that you have there. Where are you guys as far as that process is concerned?
Well, we're there. We have all the facilities to take you from no training at all to your private pilot. That's the initial phase, and that takes, I believe, anywhere from 2 to 2.5 months. And again, I'm not the flight instructor. By the way, we have a phenomenal Chief Operating Officer, Bill Sermo, former Navy Lieutenant Commander. I think the world of him, and he has streamlined the operations and the trainings so that as we go from 10 students to 20 students to 50 students to 100 students, it's uniform, whether he's the flight instructor or the guy that just came in 2 weeks ago once he learns the system. That's his background, and you don't get to be a Navy Lieutenant Commander for doing things on the fly. It's by the book. It's by the book, and that's how he trains his staff. And the people he surrounds himself on that end, and just the way he conducts himself is everything that you would expect from somebody with that kind of background. But as far as Atlantic goes, which is also the parent of Ascent, and we acquired Ascent via Atlantic. It sounds convoluted, but it makes sense from a structural standpoint. They have everything there. And for those who don't know, again, to me, I'm a financier. I never got excited whether it's high-tech, biotech, flight training, distressed assets. But as I've come to understand the industry, we're really in a very exciting place at an exciting time. The demand for flight training is exploding. There's federally mandated retirement of U.S. pilots that was signed by George Bush some 4 or 5 years ago that's coming on right now. So there's a record number of retirements. Also, the foreign demand has exploded, a lot of it out of Asia, but there's also India, which may be Asia. So if you're a geography major, don't flame on me for that, but also South America and the Mideast as well. And so the demand is really big. Like I said, our location is prime, and this Part 141 and our multiple location is going to drive that. A couple of the missing ingredients that we are addressing right now, and they've been in our press release. They're things that we've commented on, we'll continue to comment on, are 2 really missing ingredients that will drive the revenue. And that is there's an application with CVIS that will allow us to sponsor for educational visas foreign students, but essentially allow us to train foreign students through the Homeland Security. And those are the students that are coming over, and within a 6-month period, and actually I would tell a lot of parents this as well, but within a 6-month period, somebody can come over to the United States, and English is the universal language of aviation. They can go from nothing, from zero experience to private pilot to commercial pilot in 6 months. It costs approximately $55,000. There's some nice margins in there for us. We applied for that, I believe, I want to say in May, and it's anywhere from a 6 to a 9 month process. But once we get there, we already have foreign students that have contacted us. We have demand for that already. We just can't take them. We can't sponsor them. And there's a lot of them in North Florida at other schools that would like to go to ours because we have a higher pass rate. It's not as strict where, we're not just going to flunk you out like some of these other guys, just putting people through the mill. In addition to that, we do have a recruiting plan. Most of the credit goes to Bill Sermo. Again, he came onto the company because this was going to happen 2 years ago. It didn't, but he put together a recruiting plan then. In addition to myself and our other board member and officer, Danelle Vigil, who's phenomenal herself. She has a degree in organizational studies. She also has a tremendous legal background herself without being an attorney. But we have a plan ready and waiting the minute we get this application to recruit foreign students. Also doing it in a way that empowers other people out there who are recruiting them already. And we think it's a situation that once we're able to do it, it'll allow our revenues to grow exponentially. Right now, we're doing about $35,000 to $40,000 a month. One of these students who signs up, they generally pay up front. It's $55,000.
It's an expensive program. Well, not only that,
Jason, let me just this was my pitch to parents or anybody out there. We know what kind of environment we live in today, and I'm not going to get political about this, but think about the world we live in today where kids are sending their kids and parents, I'm a parent, send their kids to college. They're spending 18 grand minimum, if not 40 or 50 minimum, more likely to go to college for 1 year. And those,
well, yeah, and then at the end you have nothing. So it's a losing game. We have more college students that are unemployed or working at bars right now than we do, out of high school entrepreneurs. But we touched on it for a quick minute, and I really want to point this out because it is such.
Finish that though. Yep. So you could become a pilot. Maybe it's not 6 months. Maybe it's 8 months. Let me tell you, some of those kids coming from overseas, they're not here screwing around. They're here to get something, and they know they have a time frame. They get it. But even the U.S. students, you went to school for 2 years. There's no jobs for journalism majors anymore. There's no jobs for I don't want to insult anybody, but there's a number of majors out there. There's no jobs. There are jobs for pilots. You go down to Texas, there's jobs. Oklahoma, there's jobs. North Dakota, there's jobs. And there are jobs for pilots, not just guys driving trucks. There are a tremendous amount of jobs, and you can start working right away. Get your 4-year degree online like everybody else, but you can get a chance to go back to work or get some work while you're getting the rest of your degree. And that's a phenomenal opportunity. We're getting all these licenses in place. There's some litigation I'm going to talk to you about that has impeded our progress and not allowed us to fully bloom, and that is coming to its end, and I'll explain that later. But this is a phenomenal opportunity, and it's still a value. For $55,000, you can get your pilot's license and start pursuing a career in aviation. And we're going to expand on the careers in aviation as well, and I'll tell you about that as well later on down the line. But I think it's really phenomenal and important for us as a company. Anywhere from 30 to 40% of that full amount is profit for us.
Yep, that's what I was going to say.
Higher.
38 to 45%. That's a huge profit margin. And from looking at the location and the setups and the technology that you already have in place, it's already there. The school's ready for all these overseas people to start walking in the door with a 38 to 45% profit margin. I mean, you're not taking inventory, you're not moving, products, across the international waters, or having to do any of this major stuff. Everything's already there, and those profit margins are enormous.
Yeah, those profit margins are enormous. And again, I say 30 to 40. I'm very comfortable at 30. That's one student. But as we get economies, if I'm training 10 students at a time on a ground school, and there's a certain amount of that goes on, then my margins go up, and they can go very high. And there are other variables to that, as well as other variable programs that we can offer once we get there. I also want to touch on one other thing that's a driver for us. We're associated right now with a school out of Colorado. It's a for-profit school. We have some financial aid programs available for people, but we have a very, very large military population in and around North Florida and Jacksonville, and we love the military and any support that we can provide, we will. I have, in fact, started a nonprofit that we don't have the 501c3 approval, or else I'd tell you more about it, but it'll be specifically set up to help returning veterans from Afghanistan and Iraq with pursuing careers in aviation. And it'll essentially pay for most of the training, if not part of it. We're setting that up. I announced that, and I do a number of things legally. This has been a process I'm not really used to. So it's taken longer than I thought. But one of the things that we are also working on, we have several avenues we're pursuing. It's in the works, and when it's done, it'll be done. But once we're associated with a not-for-profit school, basically like your typical university, those are not-for-profit schools. The Veterans Bill right now will allow for financial aid for all of the military veterans and interested pilots to go from start to pilot under the VA bill. Right now they don't, because we're only with a for-profit school. So the first $10,000 of their training is not covered by the GI Bill or the Veterans Administration. But once we get that association, we're going to have a number of veterans, and we have a database of them who will come on and train with us as well, and that will be additional revenue that will drive it. So between the CVIS and this upcoming association with a not-for-profit school, if I'm saying that correctly, if it's coming through, then we believe that's another revenue driver. And it's a revenue driver where we have people call us every day, not only in Jacksonville, but also Colorado Springs, which is close to a huge military installation. And they will come, and we'll get those veteran benefits. And ASCENT processes a lot of that out of Colorado Springs right now. They get a lot of their revenue from there. But we'll be doing that, a significant amount, we believe, also out of Jacksonville, which has a huge population of veterans and returning veterans.
Yeah, that's excellent. I'm actually a Marine Corps veteran myself, so we always back those up, and those programs are phenomenal, not only from an exposure perspective to be able to keep the doors swinging, but also even on the not-for-profit side of things, you're able to carry a profit margin. Again, I'm not an attorney. Also, you're able to carry a percentage margin, with some, tax credits and keep the seats filled. We've also seen, there was a quote that we put in our research report here for the investors to take a look at, as the signs of global pilot shortages are mounting as airlines expand their fleets. It looks like Boeing wrote in its long-term market outlook that Asian airlines in particular are experiencing huge delays and operational interruptions due to pilot scheduling constraints. It says that according to Boeing, over the next 20 years, Asia Pacific will demand in excess of 183,200 pilots, China alone accounting for 72,000. Europe will need an additional 92,000 pilots. North America will need an additional 82,000 pilots. Latin America, 40,000. We start talking about the breadbasket as they're growing. So, it's not just a growing industry. It's almost an industry that's at the brink. I mean, it's growing faster than we can supply the educated individuals to place in the seats. So the opportunity for expansion is, you're attached to a catapult.
Well, and we believe so. We can have multiple locations, and it's also part of what I believe should be factored into your consideration of the valuation of Quasar as a company. As we get these certifications or applications, it is a barrier to entry to other people to get involved in this industry, and they are in and of themselves a value adder to the company, in the sense that not everybody is a 141. Not everybody has this CVIS approval. There are other opportunities we're going to pursue, and but right now we believe that the steps we're taking are the things that the investors in Quasar from 2-3 years ago thought was happening, and it went from being a phenomenal company that was going to pursue avenues in areas of aviation by making their own light jet and doing the flight training, which was considered the bread and butter, because you can bring students in every month. It's kind of like cutting a coupon. We've built that at the center. We have the simulator. We have the planes. We have the 141. We're going to get the CVIS, and step by step. And it hasn't been easy. Everything's a process. Everything's a fight. Everything's hurry up and wait. Again, which we believe adds to the value of the company. But we're getting there. That's kind of where we're going. As an example, there's a phenomenal flight training school called Sunrise Aviation out of Ormond Beach, which is on the east coast of Florida. I think it's just south of Daytona, or maybe it's north of Daytona Beach. And I grew up in South Florida, so I should know. But Quasar itself had an opportunity to get a contract with a local community college there called FSCJ. We couldn't because we weren't ready. We didn't have our 141. We didn't have the financials and the books in order. The company was kind of in limbo between a couple of different CEOs at the time. I think it was Bill himself who referred the contract and the application for that opportunity to Sunrise Aviation. Their revenues have gone in the last year and a half since they've done that from about 4 million to 9 million a year. So the opportunities are there. Once we put it in place, we think that we can grow this business. As I said, we're doing 35, 40,000 a month. That's people walking off the street. And there's reasons why it's that small. But once these things go in place, it's not hard to imagine 5 new students a month at 55 grand a pop, 10 students. And the business itself is scalable in the sense that once you have these licenses, flight instructors are out there. Being a flight instructor is valuable to a flight instructor because they need the hours to go out and be a commercial pilot themselves. They can get all the licenses, but in the United States, you also need X amount of hours, which allows you to get a particular seat or an opportunity to fly for a regional or a major airline or something else. So they need the hours. So there are flight instructors that will come. And similar to almost a real estate brokerage firm. If you're the broker, you can hire as many agents as you want to get as many listings. And that's the flight instructors are kind of like the agents. They can do the training. Of course, we want to have people there for the longevity, but the nature of the business is sometimes they are, sometimes they're not. Their skill is transferable anywhere in the world, and they come and go sometimes. But we believe once we build it, we can build something that's scalable to some significant numbers. And the way that we're running our company and setting it up for the long term, everyone who works there, from the guys who turn wrenches over at corporate air to administration to finance to anybody, will be participating in some of the revenues from Quasar, so that everyone is focused on the profit side of that. And again, that's part of my background is to try and build that environment and build that opportunity so that people are focusing on making money, not just punching a clock. And the people,
exactly,
and the people we have there now are dedicated to it. And, as I said, I mentioned Bill Sermo and Danelle Vigil. These are people who work, 12, 15 hours a day, 6 days a week down there. That's not an exaggeration. That's what they do. They work. They're dedicated, and they're dedicated to making the company a success. They've been there through some of the tumult, which we can talk about when you're ready. And why I think Quasar's, in my opinion, undervalued. But they've been there and they're dedicated and they're not going anywhere. They've dug their heels in. So I'm extremely, extremely proud to be associated with them. And actually, I'm an Irish Catholic kid, and these people outwork me, and it's kind of embarrassing sometimes. But they really do, and I don't say that facetiously. They are hardworking people, and a lot of the people associated, Bob Schwartz with corporate air, they work. That's all they do. And it's not for glory because, again, we'll get into those matters. There's been a lot of negativity associated with the company, which, again, to me, that's an opportunity. I'm a distressed investor.
Oh, it's a huge opportunity. And, and I'm happy you touched on that. There's so many investors and it's the experienced guys that make the money that know this. And, you see the average investor, come into the market and they hear all the cheering and rah, 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 to the moon from this corner. They run over there and, they lose the money. And over here, it's the opposite situation. You've got to be a distressed investor. And we'll kind of go a little bit more into that and the previous CEO and a lot of the issues that the company faced that you guys are actually cleaning up. We see you making a market. You got a float of 4 million shares. The market, you really can't get a better share structure than where it's currently at. Not to mention, you guys are going through and literally tackling these major issues that kind of sat, that kind of hung over the company's head for a little bit. So, the licensing is coming into place. The schools here, if they take a look at it in the research report we put together, this isn't just your average run-of-the-mill type of location. These are like big flight simulators, these boxes that the students climb into. This is the real deal type of scenario. And it seems, there's a lot of things that are coming to the table that kind of hung over the company's head that is good things for the company. You guys going after a couple of the people, the motions for judgments that you have, your attorney, how you're going after former CEO Brady and Duganova, not even sure if I said that correctly. This is all very, very promising for the company to be able to finally put your foot down and say, listen, you guys have really taken advantage of the company for too long. I'm going to go ahead. I'm going to put the top guys that I can find in the right positions that are going to be able to handle the workflow and tackle these major issues, and in return offer the investors profits, revenues. The market isn't all about a 5-minute trade. You grab a good swing position of a company just like this one that has just put you guys have just put your chess pieces on the board, and you're just starting to move the chess pieces. So for a long-term trader, a swing trader, to be able to come in and pick up a lot of these shares, the timing really couldn't be better than right now. Let's talk about some of these issues that you guys had from the past that are on the table right now that you guys are going after aggressively and getting off the table one by one. Let's talk about some of these situations and how you're handling them.
Okay, and one other note too in terms of it, I do want to tell you too that we've always had the full cooperation of the Jacksonville Aviation Authority there at Hurlong. We had big plans, and they have always cooperated with us there, and they're a big partner on how you operate, and they can be a tremendous resource as well, and they have been, even though there's been ups and downs with the company too. So working there in Jacksonville, they're just great people. And like I said, I'm originally from Florida, and it's good to go back. And there's just good people associated with that. And most of the people there that are coming around are from the military, whether they're students or instructors. And it's just a great feeling to be associated with the company, despite the things that we're going to get into. So I wanted to mention them, and we're just proud to be associated with the Jacksonville Aviation Authority. But let me talk about this, and it's two things. It's obviously an item for discussion. It's an item of concern if you don't know anything about it, but it's also an opportunity, in my opinion, from where I see. And I've been in a number of litigations as an investor. 9 times out of 10, everything goes right until when? Somebody doesn't pay you. And then you got to go through this process. Quasar right now is engaged in a litigation that started out as simply an injunction for the cease and desist of interference of a CEO that we removed via shareholder vote. There was a dispute about that. That started he was removed January of 2011. Don't quote me on the dates, but approximately the end of January 2011, when he was going to merge the company with an unrelated industry type company called Centicom, which was rejected. He didn't have board approval to do this. He didn't have shareholder approval. And since then, in my opinion, has poisoned the well in an effort to kill the company. I'm not here to characterize anybody's behaviors or actions, but that's my characterization of it. So I guess I'm contradicting myself. I'm more of, for lack of a better word, focusing on when I came in and was asked to come in late April of the company to assume the role to actually run the public side of the company. I accepted it. I don't think it became official until June, but I wanted to focus on two things. One, let's build the company up from the start where we are. Let's go forward with what we have. And then number two, let's recover what we can. This is a company that had, through one way or another, and I won't get into the characterization of that, but it sold stock totaling at least $10 million, and some people say $20 million worth of stock in the open market to build this great conglomerate. Through the course of that, they made a number of investments and or loans and or deposits to various people that we have sought from day one to recover. The litigation process has impeded our ability, in my opinion, to collect from a number of these parties, as both former CEOs, Brady and Deganova, have interfered in the process, and we believe, we have strong reason to believe, that they're interfering directly with our efforts to collect from these individuals and or these entities as well. The current litigation we have in place right now was just simply to remove Jeff DeGenova from the CEO position. That has morphed into a tortious interference claim. We're in one of Quasar's largest investments, $1.72 million that they gave of hard cash to a company called Mineseeker, which is now merged into a public company, which coincidentally, Mr. DeGenova, or however you say it, is now the CEO of. He acquired the shell in December of 2010 while he was the CEO of Quasar. He did the merger later on. He funded him in the meantime, as well as a number of other things. And legally, without giving a lecture here, It is, in our opinion, a tortious interference act of a business and contractual relationship, which we had, which he was privy to by nature of his role in Quasar for a limited time, that he used to his advantage to basically create an opportunity for himself, which he pursued by buying another public vehicle and merging this company into eventually. So that is something that's out there. On top of the fact that we lent Mineseeker $1.72 million as a loan, and we have made a demand to them for them to pay it. They refuse it. We will litigate them. It is a litigation, and if we do receive judgment, we think it's pretty cut and dry. You lend somebody money, they take the money, which they've acknowledged they've taken the money, and they don't pay you back, we'll get a judgment, and that judgment can be perfected under English common law in the United States with their parent company, a public vehicle, which we're excited about because we believe it represents a remedy for us to actually collect something, and or we can pursue them in the United Kingdom or the British Virgin Islands where their for-profit company is formed. So that's one of our claims. That's one of them we're pursuing. The tortious interference claim sounds like a big word, but Mr. Duggan, as CEO of Quasar, as an individual, and subsequently as the CEO of NHS Health Systems, which is the other public vehicle, symbols NHSH, really created this interference by merging this company into his other new public company after he was deposed, and he was doing it while he was there. Creates an ability for us to collect damages for that and then exact and or collect those damages through that public vehicle as well. Now, thirdly, without getting people too far out on a limb here, at some point the majority control block of this public vehicle, NHS, was going to be acquired by Mineseeker and their principal in an agreement that Mr. Duganov and his son witnessed and other parties witnessed, as well as parties to Centicom and parties to Mineseeker, which were the other parties to the agreement. They basically entered into an agreement to acquire the control block of NHS, which they turned around and ripped up the agreement and said, this agreement's not valid because we don't believe you ever validly owned it. Well, the owner of that control block in turn came to me and sold me that control block, which I have assigned to Quasar. So Quasar has multiple claims over essentially a public company that has an approximately $20 million market cap. The company itself, we wish it the best. We hope they're very successful because we believe that our efforts are going to be successful as well. So it's not just one claim; it's multiple claims on multiple counts, and we're not pursuing it out of spite or anything. We're pursuing it and spending real dollars because we believe there is value there, in value in excess of over $1.7 million.
For Quasar investors, this isn't a bad thing. I mean, this is an amazing thing because the price is already, taking a hit. Those factors are already baked in the cake. You've got an opportunity here to basically sit and potentially be on the receiving end of, at this point, since they've already been considered losses, what would be considered a 100% gain.
Well, certainly for anybody who is an investor now, it's hard to really factor that into a valuation or quantification of a valuation, right. But it certainly should be considered. And it should be considered in the sense that over and above the fact that we have operating businesses that have strong barriers to entry, we're in a business that has strong demand, high margins. We're in a perfect location, in our opinion. We have multiple locations. We have mile markers that we've not only taken the step towards, we're on our way to them, and that's the CVIS application. That's the for-profit school. There are other things as well. We believe that this cannot be taken lightly, and we're not taking it lightly. It's a significant amount of money that the public company gave to this other private company as a loan, and we intend on collecting it. And again, without tooting my own horn, I have a pretty good track record of collecting on judgments and collecting on debts. as a distressed debt investor, it's just the nature of what you do, and you have to evaluate whether or not something's collectible and whether you could get there. And we believe in this case there are not only multiple claims, but there are multiple parties we can seek compensation from. So we'll do that. In addition to that, there were other monies that have gone out the door literally that we believe are collectible. Once a lot of this litigation gets cleared up, and I'll tell you how part of that gets cleared up here in a minute. But not Mr. Brady, as you say, had paid for. Unfortunately, I hate to say this, as a financier, you never pay up front for financing any public CEO. Call me, call your mother, call your priest. You never pay up front for public company financing, no matter what you're doing. You pay attorneys, you pay accountants. You don't pay somebody to go raise money for you. But Mr. Brady had been induced to pay money up front to a number of different entities. There's a Clayton Advisors out of Chicago. There's a Shannon Newby out of New York. And the parties, I don't know the exact numbers, but one party paid over $400,000 to that was secured with a promissory note. The other person paid over $700,000 to that was secured by a third party who guaranteed it. These particular collections we are pursuing. We do believe that there have been a number of instances where these former CEOs have interfered with our providers and people who owe us money, and we believe they are muddying the waters. But we are pursuing those as well. And then there's Mr. Brady himself, who at some point had issued to himself or issued shares in settlement of debt to himself that he put on the books that wasn't there during the original merger. We are pursuing that and pursuing a way to mitigate the damage that he's done to the company. Our first step was to prevent any further damage, and that's what any regulatory body would do. So to protect the company, we've taken those steps. We've precluded him from voting any of his interest. He is no longer the majority shareholder of the company. And we are basically in the triage of things. He's next on the list of things to do in terms of taking care of him, taking care of the damage that he's done to the company. My initial background check, I can't find anything recoverable in terms of assets. So from a strictly capitalistic / mercenary standpoint, my main goal, my main objective for the sake of the company is to recover the monies first and recover the sums that are recoverable, and then go down the line and address the other grievances that the company has and that the company needs to take in order to protect itself from these past actions. So that's really a wild card for the company. We think it's quite frankly, I think the company's undervalued. You have a public vehicle. Its reporting is up to date. We're delinquent one attorney letter, which we're addressing currently. That'll make us pink current again, which we were for the last 6 or 9 months. All of our reporting is getting up to date. A former public company CFO is doing our books as well as a forensic accounting to put the pieces back together so that we have the best numbers available to present to the public so that they can make their investment decision based on what the numbers are, not just based on words and promises, et cetera. But we do believe there's tremendous promise. Like I said, it's the right industry at the right time in the right location. I believe that we have pretty much the key personnel we need in order to not just do the business under the circumstances that we're currently under, but also to drive us further. And they're ready for the growth. They're ready for the next phase. They have the capabilities to do it. And then you have this wild card of litigation in a public company that you can track the value of. And I've, like I said, I have some experience doing this, and I know how to make that remedy work and how to make sure that pays off for us. So again, that's a wild card. It's a bonus for potential investors, but I don't think it's one that should be taken lightly. And it's not something happening in 2 to 3 years from now. It's being pursued. It's been pursued. And hopefully we'll have some resolution of that in the next 6 to 12 months. would be my guess without any undue delay that I could anticipate at this point.
That could potentially be huge. And when these things come to the table, if and when they come to the table, let's say, for example, you're an investor in a stock right now, it could be any stock in the market, but let's say, for example, just some numbers at random, that if, there were per se 4 million shares or 8 million outstanding shares or something along the lines of that, and a market cap of 600,000, let's say, 5 million, 3 million, 2 million, whatever, we're just come rolling in the door. I mean, that for a stock in the OTCs, from the investor's point of view, could be unbelievable. I mean, we've got the shares from the CEO of that deal that you were talking about have a current market value of about $7.5 million. Now, these are just numbers that are based on math, which is why I'm putting them out there. You have potential to bring in on any of these situations here more than your current market cap in itself. So, from an investment perspective, if you're in a long-term swing position and some of these things come to the table, like I said, they can't be put into the fundamental aspects of the business. Aside from the strong, legitimate business with an exceptional management team and the right people in the right places, multiple facilities, holdings company that knows what's going on, CEO with a background in the business, you have this huge wild card. I mean, that could literally come in the door at any time for the investors.
It's actually close to a $20 million market cap today. So, and I can wax poetic about that company and its opportunity. And I think that's $20 million. They haven't filed a report in 12 months, and they've got a yield sign on the OTC markets. But it has potential and it has a great story. And again, I'm not trying to denigrate that company. A lot of the investors who originally invested in Quasar invested in it because of that specific subsidiary. And so there's merit there, and we hope they're hugely successful. I think if they just did their reporting, they'd probably have a 50% bump in their market cap. But it is there, and more importantly, look at it as this: the Quasar made a $1.7 million investment. We're going after it. It was a $1.7 million investment in a loan. It's recoverable in our opinion in the sense that there is while the company may not have $1.7 million, it can issue $1.7 million in shares, as an example, which is less than 10% of their market cap, and we can monetize that. So
now, would it be based on the shares at the current value of the time of the deal, which would be $7.5 million, or would it be the $1.7 million current value?
Well, I don't know. We're not even at that point to discuss whether or not what any potential reward would be. And I could go through a number of different scenarios with you. We invested $1.7 million out of 4, or 51% of the company. So 1.7 is approximately 22%. So should we get 22% of the 19.5 million today, and maybe it's 30 tomorrow? It's been as high as 15 cents. But should we get 22% of the company in terms of shares? So there's a number of different formulas, and you go into there, and again, I'm not an attorney, but attorneys will tell you, wait till you get there before you determine, once you have a finding in your favor, then you can determine what the value is and how you should take it. I can tell you that, we intend on allowing investors to participate in anything, not just strictly going back to the company, but in any type of distribution that we can do. We think that will add tremendous value to the company in terms of shareholder loyalty, in terms of shareholder interest in the company. It'll be over probably, if it was over a liquidation period in securities, it would be over a period of time. And we've discussed that simply because it's the right thing to do. So many people waited a long time in this company and were misled. But again, we're whistling Dixie for now. It is just something to factor in as far as where this company's positioned, what it's been up against. We have people who are literally from one of the depositions are trying to let this company die on the vine. We didn't let it happen. There's a number of determined people. There are a number of loyal shareholders who have stuck with us, and investors, and I've put even more additional monies into the company. It's on the balance sheets. We're not going anywhere. This company's going to survive. We're not going to die unless God strikes us all down and who knows what. But there's always something.
Right.
But But we do we
Exactly.
we believe, not just because we're stubborn, we believe there's a huge opportunity here, and we're sitting right there at the beginning. And I don't do anything for free. It's just my nature, and I've been doing this for a long time, and I'm only doing it because I think that there's tremendous upside. So I'm excited about the opportunity. I'm excited that you gave me the opportunity to tell you about Quasar here and any of your potential listeners. And you get any questions, I'd be happy to answer them. I'd be happy to come back on again if there's some other milestones and tell you about this story. It's a great story. It's a really interesting company, and we expect great things out of it.
We also want to commend you for coming on the radio show. We think keeping an open line of communication is such an important aspect in the public market. And Joe, it really seems like you came in and you're grabbing this thing by the horns. It's exciting to watch. There's a lot of companies, in the OTC market that have nothing going on. And, they basically putting their tooth under the pillow every night and hoping the tooth fairy shows up. This is not one of those situations. I mean, there's a lot of very interesting things going on and taking place, not just with the growth in the segment that you've chosen, but, with the court stuff and with the new leadership roles that have taken place. As a new investor coming in, you have the potential position to be able to capitalize at an extreme level off of maybe other people's losses in the past, per se. This is a new company with a new face. It's gotten a makeover, good one at that, and it's very exciting. Joe, it's been our pleasure having you on the show today. We'd like to invite you back at any point in time with any updates to the Stock Legends radio show. And do you have anything that you would like to say directly to any of the new investors or some of the old investors, any other outlook or anything you have going on, or maybe just a comment to say, hey, welcome on board?
I think anybody taking a look at Quasar as an investment opportunity, or if you are an investor, I'm going to do my best so that the company makes money. Unfortunately, sometimes the personalities become more dominating than the business, but it's a unique business. I've been an investor for a long time. I'm not that old, but since 1986. And it's really unique in the sense that in the day of biotechs, high techs, marketing, Facebook, LinkedIn, this is a real company with real assets at a real location, real people, training people to do real jobs, and not that the others aren't real, but more tangible than most, with nice margins, large demand, and big upside, and it's scalable. And there are other training companies out there that I'll try and put together for my shareholders, and I'll share it with you certainly how you value these companies and the potentials. There are multi-$100 million companies that are doing flight training, and then the related industries and the related businesses that go with that. And we didn't get into that. We could place pilots once we put them through and get a fee off of that. There's other aviation-related applications and educations that we can get into. We can get those courses accredited. We can get into the charter business. Quite frankly, the one thing that I've always been very good at doing, and again, this is the end of the interview and didn't get to it, is I've made a living out of buying $1 for 30 cents, distressed debt. And then even if I have to turn around and flip it at 50 or 60 cents, I make money. And what I'm trying to do is apply that skill, that knowledge, that background, which I've done for years, to this business and the aviation-related opportunities that are similar to that. And with my background in finance, I think I can use the public vehicle and my finance background to exercise and execute those same types of opportunities in the aviation field with Quasar. So it'll be a vehicle for growth in a way that not everybody is going to see until it actually hits them. And that's what I'm excited about. And like I said, I've not typically embraced the role of being out front in public, but I'm excited about this one particular opportunity.
That's phenomenal, Joe. It's been our pleasure having you on the show. Again, we hope to have you back. For the listeners today, this is public ticker symbol QASP. Check it out. Joe, come back anytime. It's been our pleasure.
All right.
All information posted by Stock Legends for informational purposes only. It should not be construed as an offer or solicitation to offer or buy or sell securities. By listening to this radio show or this poster or this video by Stock Legends, you are accepting sole responsibility for your own investment decisions. By reading messages, doing so in videos, or listening to the radio show, you acknowledge that the information hereunto contained within this message or video provided or radio show is for general opinionated discussion and for informational purposes only. Therefore, should not be considered to be complete, precise, accurate, or current investment advice. Be aware that internet persons, videos, and so on, not only on the original message board where this disclaimer was discovered or in this video show, but other message boards that is not limited to the originated video of the website, may be increasing or decreasing our share positions in security regardless of what they are saying or posting or construing on this radio show, and may be compensated in some way or form by a third-party investor in the company mentioned posted in this video or radio show. The non-affiliated third parties compensated may or may not have shares to liquidate, which could affect the stock price. Assume that any security mentioned is owned by Stock Legends and may be buying or selling, adding or subtracting away from the position that they have, regardless of anything said, inferred, construed, or referred to. Believe before or after starting company profile. Always do your own due diligence prior to making investment decisions. Never borrow money and buy penny stocks. Always remember penny stocks are very risky. You could possibly lose your wife, keys, house, and everything else comes along with it. Also, be aware that information provided concerning certain securities contains forward-looking statements that involve risks and uncertainties. As in any investment, never invest in a penny stock unless you can afford to lose your full or entire investment. We completely oblige